Hey everybody, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. And I've got kind of an interesting video for y'all today. I was asked by a subscriber, Francisco Mercado, and I hope I pronounced that right, if I would do a video, and let me go ahead and read you what he asked me. It'd be a lot easier. He said, "Thank you for the video, Chuck. One idea, if you think it might be useful, would be to show your in-depth, as much as possible, research of one stock to showcase the full potential of FastGraphs as you yourself use it before investing." So I really appreciate that. I think that was an excellent suggestion. And he went on to say, in most videos, because you're trying to give an overview and cover as many stocks as possible, you can't go that deep, and you always warn us that the main graph is just the starting point. Can you share with us your step-by-step process to research a stock in depth? Is there a checklist of items to check on FastGraphs before buying? In other words, once you find a potentially good stock, what steps do you follow and what items do you need to see before investing? Thank you for considering it. Well, you know, the comprehensive research and due diligence process is really an excellent question. And I do want to emphasize that it is not something that I could cover in the context of one short video. Okay, the real process itself takes hours. Now, I believe, first of all, in having concentrated portfolios. I like to have as few companies in a portfolio as possible. 15 is normally enough to give you all the benefit that diversification offers. So 15 to 20, maybe 25 stocks, because part of that real process about being an intelligent value, investor and prudent value investor is to know as much about the companies as you can that you own. Because number one is I don't invest in the stock. I invest in the company. Okay, so I'm most concerned with what the company is. So the research process usually starts. Now, Francisco asked me to, once I identify a company, but I do want to kind of start with how I would do that. I would go into the portfolio section of FastGraphs, and I would go into the dividend aristocrats. Okay, these are, now, by the way, let me back up. If I was looking for a good dividend growth stock to invest in that was attractively valued, that I felt like I could own for many years, the dividend aristocrats are a group of, premier creme de la creme dividend growth stocks that have increased their dividend by 25 years or more. Now, AbbVie is one that I would get my attention because I'd be looking for a low valuation, but I'd also be looking for, a stock that had potential to give me some good returns going forward. Okay, so I'd look at a good dividend yield, et cetera. But once I found a stock that had the right earnings yield, in the case of AbbVie, I've got over 10% earnings yield, then my step would be to go ahead and click on the name in FastGraphs and then start looking at the company. And then I've designed FastGraphs actually to help me go through this research and due diligence process as efficiently and effortlessly as possible. And again, I'm not going to go through the entire process here because it's very complex, but I am going to, in other words, I'm going to show you the steps, the process, not give you the full in-depth research of this company. But here's how I would start. I start by looking at the metrics that I have available to me on the basic FastGraph. I start with adjusted operating earnings. And, those are the earnings that really reflect how the business is doing. And then, that's the orange line in this graph. And I use a 15 PE ratio, as most of you know, as a good benchmark for most companies that have decent growth rates. I'm looking for the price to be attractive below this line so that I see a margin of safety in the stock. I'm looking for the dividend yield, the quality ratings, debt levels, et cetera. So I'm looking at that and saying, do I see enough here to make it attractive enough for me to go further on with the research process? In other words, is the stock research worthy or not? In the case of AbbVie, I would conclude that it is. But I wouldn't stop with operating earnings. One question I get a lot, and I'm not going to go through all of them here, but I want you to see I would go through, I actually do go through all of them, but I'm not going to do it for sake of this video. The next thing I might look at is diluted earnings, okay? Because diluted earnings are what you often see on other financial reports. These are GAAP earnings. Okay, and these earnings tell me a little more about how the business. I don't normally use price on these graphs and try to value a stock. I just try to see what's been happening internally with the business. There's a lot of accounting convention, one-time charges, accelerated write-offs, and so on that can go on with GAAP. So I want to look at the company from a perspective of GAAP. Then I go into cash flows because especially for dividend growth stocks, cash flows become very, very important to me. So I want to see if, first of all, the cash flows are covering the dividend. that becomes another important point to me. And so far, AbbVie is passing all those tests. Again, all I got out of the GAAP earnings was the company does have some accounting things that I might want to come back and look at later. Okay, then I go into free cash flow, because free cash flow is what's left over after what it costs to run the business. And I want to see, does the company have free cash flow that covers a dividend? And once again, AbbVie passes the test, completely. Then I'll go ahead and look at other metrics like EBITDA and EBIT. And I'm not going to go through all of them, but you get the point. So I go through all these metrics and try to determine whether or not I have a research-worthy candidate here or not. And I focus on the next couple of years of forecasting. I start to discount forecasting that goes beyond the next year or two for a lot of reasons. But, obviously the further out you go, the less certain the reach is going to be. So now I've gone through this process and I've determined that, hey, this stock looks intriguing. So now my inquisitive mind says, I want to know something about this company. So with the external links functionality of FastGraphs, I've designed it so the very first place I can go to is the company's website. Now, I would spend a lot of time on a website of a company, especially one that I wasn't familiar with, and I would try to get to know the company as much as I could. Now, I'm going to go through a lot of the corporate propaganda, their principles, their strategies, the company at a glance, their ethics and compliance. All these things are things that would give me, some insights into how the company is presenting itself to the public, not necessarily how the company really thinks. In the case of a pharmaceutical like this, a biotechnology stock like this, next I want to look at their science. I want to see what areas of therapy are they most focused on, okay? So I would go through here and I'd discover that it's immunology, oncology, neuroscience, eye care, virology, and aesthetics. These are their main, scientific areas that they're looking at. Now, I can go a lot deeper into each of these things, by the way, right on their website, okay? And again, I would spend time doing that, and I'd be kind of casual about this. I'm just trying to get a feel for the business and understand it. But when I'm dealing with something like a pharmaceutical, a main place I would go would be into the pipeline, okay? And what I want to do is look at the pipeline, okay, as much as I could, and look at all the stocks that are in phase 1, phase 2, or phase 3, with an emphasis on focusing on the ones primarily in phase 3, because that's really where I'm going to probably get the best opportunity to see an approval, where phase 2 is still very good. But again, I see a nice, rich, full pipeline in all of these different areas. Here's the pipeline for neuroscience. I'm not going to waste a lot of time on this at this point. I just want to see, do they have a pipeline? In this case, AbbVie clearly has a really good pipeline. Now, from there, I could spend time on some of this other stuff here, but a lot of this is really, propaganda. Like I joked with a client the other day and a friend and said, I've never, asked me if I like to listen to their earnings reports. I do, and I'll show you that here in a moment. But the point is, I've never sat in on an investor conference call or listened to an investor conference call where I heard management say, gee, this is really a lousy company that I run here, and we are really horrible, and we're going to have really poor numbers going forward, and you should avoid investing in us at all costs. That's obviously not going to happen. The company's always going to be putting together their best, foot forward. But having said that, what I'm trying to do is get through or past the hype and hysteria and try to focus on the results as much as I can. So I would go into investor services. The first place I try to go in investor services would be events and presentations, okay? And I'm going to go to presentations here with AbbVie. Now, the very first presentation, which was in February of this year, would be their pipeline update. So this is actually a presentation that analysts, by the way, that are forecasting earnings growth are going to sit through. They're going to look at the company's pipeline, and we're going to look at all the things that are in phase 1. It's very rich. Phase 2 is smaller. This phase 3, these are pipeline candidates to already be submitted for pipeline. So I'll go through this and then try to, spend some more time on what might be occurring in these forthcoming years here. So the pipeline, would give me a nice little update on what the company's looking for. But then I really like these investor conferences. Like here's a JP Morgan Healthcare Investor Conference. These tend to be very, very useful because what I could do with these is I could go through these and I could really learn a great deal about the company again. So, and again, a lot of this is propaganda. I understand that. I take it with a grain of salt, but there's also real information. These companies can't just bold-faced lie to us. So here I'm looking at, they're claiming they have strong leadership positions in attractive growth markets, and they isolate some of their key product lines here. Humira, which is everyone knows is coming off patent, but they've got other products in immunology to, pick up the slack. They got a broad portfolio and pipeline of attractive, durable growth assets. They talk about that here. They go through here and, I start to get some really important information here about their track record and their financial execution. They're giving me these numbers. I've got, some discussions about some of their, key drugs that they're talking about in the pipeline. And then it really gets interesting when I start looking at, what is the actual value? What is the possible market value of these drugs? And so here, we start getting some guidance and forecasts from management about how big these candidates can actually be going forward, how big the markets are and how big a contribution these companies can take. Now, obviously, I'm going through this quickly. I would actually spend time looking at all this stuff and thinking about all this stuff. So I would go through this entire investor presentation. And, the other thing I like to do is I like to listen to the earnings calls, okay? I'm serious, I'm not spending this amount of time, looking at these companies with the idea that I'm going to invest in the stock. I'm trying to invest in the business here. So I really want to understand the business as best I can. So I'll spend a lot of time in the company's website. The next thing that I like to go through is I like to go to Edgar. Okay, and I'm going to actually bypass this step here, but here's where I can look at the 8Ks, the 10Ks, all the financial statements, and I can actually get them and dig into them. Now, in the forthcoming version of FastGraphs, we're going to have these things already loaded in FastGraphs, so that's going to be an area of efficiency that I'm really looking forward to. Now, I've done all this. I've learned about the company. Now I'm going to start looking at some research sources, okay? I, for example, really like Morningstar. All right, I've been a subscriber to Morningstar for decades, so I'm going to go into Morningstar and I'm going to look and see if they've got any type of, reasonable information on the company. Now, AbbVie is a widely followed stock. This is a spinoff from Abbott Labs. And by the way, it's technically not a dividend aristocrat, but it is because they're carrying up some of, AbbVie's history. But I can go through here and read these research reports and start learning more even about things like the pipeline. Okay, and then whether or not the Humira, patent expiration has any potential to have them, offset that, as they say here. And then they're going to talk about, other areas, like the oncology, cancer drugs, and so on. And then, I can learn about whether they have a moat. Now, Morningstar likes to give us our profit drivers, but the people really misunderstand this, I think, because they give a fair value estimate to 103 to 97 based on better than expected sales from these two new immunology drugs they talked about here. But if you go in here and read through the lines on this stuff, you'll find out that they will often put reasons why they think that fair value makes sense. And again, I'm not going to waste a lot of time doing that for the sake of this video. But the key is when you go look at the fair value numbers, you also look at prices, and so they think fair value is 103 and the last close is 110. I don't actually agree with that, but I like hearing them and looking at them and seeing it. So now another piece of research I like is Zacks, and I'll go into Zacks, and I like to see Zacks have full comprehensive research. I get a lot of data here, by the way. I already got all this data on FastGraphs in my Fast Facts and everything, so I don't need that. But I do have, earnings estimates that I can look at here, which again, I'll spend some time on, but I like to go into these analyst reports here and then read about what the Zacks analysts are saying about the company. And then they give me an overview of what they think the business is about. And I'll obviously read this fully. I really like this Zacks approach where they give me reasons to buy. These are the positives that they think, exist in the company. And I'll spend time trying to understand those. But they also give me the negatives. Here's the reasons why you might not want to buy or you might want to sell, because they put up the positives and the negatives to give me a nice balanced look at what this stock might actually really look like. Okay, so I've gone through the research, but now there's other sources of research out there also. I might go into, for example, Google Finance. Okay, and Google Finance would give me access to some research reports, and I'll show you things like Seeking Alpha and Yahoo Finance here in a minute. I can actually access those directly through FastGraphs. So I can go into Seeking Alpha and I can see if there are any articles. This is crowdsourced research here. This is not necessarily, some of the research here is excellent. Not all of it is. So I try to discern my way through. I really like news more than I like these things. if I have people who I respect here, I'll go ahead and read their work and see if I can learn something about the company. And again, a lot of times you'll find some excellent research here. But I also like to look at the news and see if there's any news, coming out. And, like if there's a negative potentially, if they're going to reintroduce a bill to lower drug prices, that could have an effect on, AbbVie's bottom line. So I might want to learn more about that. But again, I'll go back in here. I'll look at the Wall Street Journal. I'll go in there and get a quote on the Wall Street Journal, and I'll look for news. And like, for example, 5 hours ago, AbbVie received Health Canada approval of Humira for the treatment of pediatric patients with moderately to severe actively ulcerative colitis. That's something I might be interested in. But then, of course, there's some negative articles in here, negative news items. And again, I might look at an article here in Barron's that apparently is mentioning AbbVie. So I'll just dig deeper and deeper. And the more interested I am, the deeper I'm willing to dig. I want to make that clear. I'll also go into sites like, I mentioned Seeking Alpha already. I'll go into sites like Yahoo. I'll get other earnings estimate data here that corroborates the estimate data I would have on fast graphs. And again, what I'm doing here is in a few minutes, I'm covering something that would actually take me hours to do. But I'm looking at the company. Now, once I've gone through all of that and I like what I see, then I continue to dig deeper, and I use the financial underlying numbers section of fast graphs to do that. So we call that fun graphs, financial underlying numbers. And I'll go in here and I'll look at, some other metrics routinely. And I don't do all metrics the same every time. But, I might want to look at book value. I don't think book value is that important to a company like this. But I'd look at the balance sheet. I want to see how much cash per share they have on hand and whether they've done anything with that cash. I'm going to look at debt, long-term debt and total debt. I want to see what their debt profile, and AbbVie does have a lot of debt. And then that takes me from the debt position. I'm going to go look at the cash flows, and I want to see if the cash flows, are, by the way, I might also look at net change in cash, which we also have on the main fast graph to see if they're, utilizing a lot of cash or not. But then I'll look at operating cash flow. And then I might actually add, long-term debt on top of the operating cash flow. And I want to see the operating cash flow, covering the debt. And I'll use total debt here because I get a different color. I want to see, if the cash flow gives me the ability to cover the debt. And the answer is they've got strong cash flows. All this debt is not coming due at once. So I go back to the long-term debt, and I'm looking at the long-term debt means they're going to amortize this, and I've got pretty strong cash flows covering that. So I'll spend some time on that. I've already spent a lot of time on the income statement by looking at, the original fast graphs. But, one thing that I will go to here that I don't have on the regular fast graphs, but the new version will be including, is I'll look at revenue per share. And clearly this company's growing their revenues very strongly. But I don't also stop at per share data. I like to look at per share data because everything's reported there. But I also go into what we call our in millions graph. And for example, I want to see common shares outstanding, okay? Is the company buying back shares or not? So that I get that on the income statement. And, in the case of AbbVie, they've pretty much kept their share count, pretty much the same. They did, issue some shares in 2020. Not liking that a lot with the valuation being as low as I think it is. But anyway, I get to see that. But I also then get to look at total revenues as a result. And rather than just revenues per share, now I can really see if revenues are growing or not. I can do this with a line graph, or I can do it with a bar graph. So it's, I can look at things like costs of goods sold. I can just go through here and start saying, are their costs, increasing or decreasing? I have all these ratio graphs. I can look at the current ratio and the quick ratio and determine if, the stocks are, if the company's, got, liquid. I can look at price to book, which I don't look like too much for this particular company, but I would like to look at price to sales. And, price to sales for AbbVie is on the low side of its historical norm, so that's not too bad. Then I'll also go into what we call the percentage graph, and I'll look at net and gross profit margin, and I'm looking for trends here. But I'm also going to go and look at things like returns on assets, which are kind of falling a little bit, returns on equity, which have actually recently increased after turning kind of sour, and then returns on invested capital. All of this are pieces of the puzzle that I'm looking at. I'm trying to ascertain whether or not this is a stock that I believe contains the right stuff for me to invest in. Now, ultimately, it comes down to what I believe the company's future prospects look like, as I mentioned earlier, at least for the next couple of years. So once I get to the level where I say, I think the stock is cheap, see, my fair value estimate for AbbVie is a lot different. I think it's $160 fair value. It's a lot different than what Morningstar was saying, where they think the fair value is 103. But I have a rationale for that fair value. That's in this case, that's about 15 times EBITDA or 15 times adjusted operating earnings. And, I'm looking at these different metrics and looking at the stock, trying to, decide where I feel comfortable. Now, why do I think the adjusted operating earnings metric is good? And why would I assign this stock, $158 to $190 value over the next year? Because I believe a 15 multiple is achievable and doable. I've got a 4.6% dividend yield on the stock right now, which is also very attractive. And that gives me, the opportunity to collect some nice dividends. But, historically, this stock has always traded at a 15-ish multiple or better. So I consider this undervalued. And I do believe the trend of the PE is beginning to move upward again. So, the stock's already had some nice movements here just in the last year and a half or so. So I see it as very undervalued. I'm going to then go into the forecasting graph, and I'm going to start running what-if calculations. I'm going to look at it from the standpoint of its normal multiple, which has been about 12. What would my rate of return be? I'm going to look at it from the 15 PE ratio perspective I talked about. I like to go into the historical growth rate graphs and look at what the historical growth of this business has been, and I can see whether it's accelerating or decelerating. And, recent growth rates are still very, very strong. I'm not going to necessarily project them into the future, but I could. This would be in lieu of using analyst estimates. I'm also going to check their analyst scorecard when I'm looking at these estimates. And, this particular company has an impeccable analyst scorecard. The analysts have essentially, the company's either beat or met analyst expectations 100% of the time. So that gives me confidence when I'm looking through this estimate data that it might be reasonable, especially the closer I'm looking. When I start looking out further, you notice that the number of analysts drop off. I'm going to go through here and look at, have estimates been increasing or decreasing? It's another piece of information. And it's all pieces of the puzzle, okay? But the ultimate end is once I've made all these decisions and I've analyzed the company and gone through the financials, then I'm going to start spending some time on the research, and I'm going to start trying to watch the market. But it's a process. I want to understand this business as clearly as I can, because when, the proverbial, what hits the fan, as it will. I mean, here's a period where AbbVie dropped precipitously, and yet the earnings of the business did well and the dividends continued to grow. This is what I focus on. I'm more interested in the business than I am the price. But I don't want to overpay for even the best business. But my research process is very simple. I try to understand the business as much and clearly as I can. And then when I've gone through that whole process, then I'll go ahead and make a buy, sell, or hold decision. Because I could also go through a similar process to this if I see a stock that's a sell candidate. I might want to start seeing, am I missing something that the market, if the market's overvaluing the stock, that's typically where I get into sell issues. I might look at that. But it's a process. It's trying to understand the business. It's a business perspective on investing. I'm not buying the stock. I'm investing in the business. I hope this gives you some clarity. It's been Chuck Carnwell saying thanks for watching. I appreciate y'all. Give me a like, ring the bell, give me a thumbs up, and subscribe to the channel if you haven't already. And thank you all for helping me grow this channel. I really appreciate it. I appreciate the kind words. Thanks.